Hello, this is Derek Iswell, Chief Investment Officer for Shelton Capital Management with a Shelton CIO Minute. Wednesday's CPA report came in stronger than expected, and with all the talk of tariffs and trade wars dominating the headlines, begs the question, what are markets thinking about the threat of inflation? One way to gauge market perceptions of inflation is what's called break-even rates. Break-even rates are the difference between inflation-protected treasury bonds and regular non-inflation protected treasury bonds. And this shows what the market thinks the inflation rate might be like for the next 2, 5, and 10 years. These break-even rates have been rising steadily since September and recently have reached levels seen only briefly since the COVID pandemic. Now, familiar to anyone who has followed the CIO Minute or read our outlook for 2025, we believe there are two important things to keep in mind when you're thinking about the effects of inflation to your portfolios. First of all, if we are in an inflationary economic regime where controlling prices is the primary driver of Fed activity, stocks and bonds will move together. This chart shows that since December, and actually a bit before then, that has been the case. And this means that bonds are not providing the diversification effect to equity portfolios that they did for most of the 15 years before the Fed started raising rates to fight inflation. Memories of 2022, where bonds did not provide a cushion for the fall in stocks, and in fact made it worse. And thus, investors need to look for other sources of diversification in such an environment. Second of all, in this environment, it is unlikely that we will see the Fed lowering rates in the foreseeable future, nor see a steepening of the yield curve. Equity markets continue to perform as they have over most of the past few years, led by a small number of U.S. growth stocks, commonly known as the Magnificent Seven, with moderated and lower returns for smaller cap stocks and international equities. Now, current events are fluid, but the situation could change at any time. There are signs that the tariff wars are simply just posturing, and if they're resolved without escalation, these effects could reverse. But for the moment, markets believe that inflation is still around, and investors must be thinking with an inflationary mindset. For further information, please don't hesitate to contact your local Shelton Capital representative. This has been a Shelton CIO Minute.